Nilesh bhai, good morning. Thank you for joining us. Exactly a month ago, this market had a lot of event risk, budget, Trump, and tariffs. Then there was RBI, MPC, and then Delhi elections. Thankfully for us, we've come on the right side of all the individual events. So if events were making markets nervous, and if the events are behind us, and we've been on the right side of the event, then do you think it's a matter of time markets will stabilize?
So, in our opinion, while there are certain events which are behind us, there are few things which will keep market on the volatile side. One, we are in a world which is increasingly becoming protectionist from globalized, with Trump administration launching newer and newer initiatives for America first. There will be concerns on geopolitical side. If that event risk is not enough, we are also seeing consistent selling from FPI. There is ghar wapsi of global capital to US. We saw one of a large private equity fund going and meeting President Trump and saying that you had asked me to bring $100 billion. Here I'm bringing $500 billion. Clearly, America first policy and higher interest rates as well as high bond yields is pushing capital back to America. And finally, emerging market today is like 1980s Indian cricket team. In those days, when Sunil Gavaskar used to get out, the hopes on rest of the batsmen was very, very low. Today, barring India, most other countries in emerging market like Russia, China, Brazil, South Africa haven't delivered return to investors. Over 20-year period, emerging markets underperform developed markets. So there is quit emerging market movement also happening. So in our opinion, markets are likely to remain volatile over near to medium term based on the geopolitical risk and also the flows.
Good morning, Mr. Shah. This is Shailu joining in the conversation. And did you like the way you said? Looks like there's a ghar wapsi when you talk about the FI flows going into the United States. What should investors back home do? Should they look at sectors where the valuation is at comfort at this point in time? Most of them talk about banks. That's also where you have a lot of FI positioning.
So for all along, we have always said maintain your asset allocation. Don't invest looking at past performance. This is time to invest in quality over momentum, reasonable valuation over expensive valuation, as price is what you pay and value is what you get. And stay away from low floating stock counters where we believe froth is still there despite hefty correction. From a sectoral point of view, midcap IT companies leveraging AI to deliver cheaper, better, and faster solutions to their customer. Private banks and NBFCs which are not overexposed to unsecured lending. On a portfolio basis, pharmaceutical sector which does get some benefits of a rupee depreciation. And telecom where there is hope of some price revision flowing into bottom line. These are some of the stocks which provide good opportunity. Thanks to the budget giving 1 lakh crore tax bonanza, tax rebate to middle income taxpayers on a recurring basis, we think consumer discretionary space will do better. This set of people are unlikely to spend money on roti, kapda, makan or basic necessities, consumer staple. They are more likely to spend this money on consumer discretionary like travel and tourism, consumer durables, healthcare, education. So consumer discretionary space, thanks to the budget, looks interesting as this tax rebate is on a recurring basis.
You spoke about the ghar wapsi, you spoke about money moving back into US. But at some point in time, there would be concerns, Nilesh bhai, which would be raised on this entire how long comeback America trade would continue. Just like FIs have raised concerns about India valuations, I'm sure somewhere this entire comeback to America grade trade will get challenged. I mean, that's how markets are.
Undoubtedly. Today, if we look at on a 15-year basis, American market return vis-a-vis emerging market return as an asset class is at the lowest point. US has massively outperformed. Emerging markets have massively underperformed. And this is a cycle. There is a decade where emerging market does well. There is a decade where US does well. So clearly from a valuation point of view, smart money will start looking at emerging market. Number two, India, even within emerging market, can make a separate case. Undoubtedly, India is expensive on a one-year basis, though that valuation in large cap has already corrected. And FPIs have been seller in large cap in last quarter, but buyers in small and mid cap, which apparently are more expensive. So if valuation was the concern for FPIs, they should be buyer in large cap and seller in small and mid cap. But they have done exactly opposite. So limited point is that yes, market is like a pendulum. On fear, it moves in one trajectory. On greed, it moves in another trajectory. Today, money is flowing to US because of Trump administration. But at some point of time, US markets outperformance and valuation over emerging market will reverse the trend.
One of your peers said that don't start a SIP in small cap stocks. I read it 3 times so that I'm not getting it wrong. Is there merit in thinking like this?
So, Nikunj Bhai, there was one very great Indian player who was not so great as a captain. And one of the junior player explained the reason why he couldn't become a great captain. Because he'll come out and say, on this pitch, you have to play this kind of shot. And he'll also show and demonstrate how to hit. But he forgot that he is the greatest batsman. The others are not. So what was very natural to him didn't really work for others. Now, in India, we have different kinds of investors. There is a set of investors who during March 20, leapt up the opportunity and topped up SIP and lump sum. Now, for those people, they know how to time the market. Fair enough. If you want to take some money out, be my guest. But there are people who didn't do anything. They just remain invested. For those people who are not likely to time the market, who won't have ability to invest when markets have corrected, I think they should continue their SIP. There was a fund launched by ICICI Prudential Mutual Fund itself in 2000, where 10 rupee NAV became 2 rupee, 80% down. What's the compounded annualized return? Even if you had invested at 10 rupee after taking 80% hit, about 13%. So if you can time the market, if you can play the shot, go ahead and play the shot. But if you can't time the market, then please follow the dharma of asset allocation. It's difficult to predict market. Nikunj Bhai, on this show, I have said so many times that SME index looks expensive. Over the last 10 years, it is the best performing index. By listening to us, you have lost opportunity to make money. You have lost opportunity to make money for the lifetime. Now, markets can remain irrational more than you can remain solvent.
No, so I don't want to get this one wrong, Nilesh Bhai. I'm not getting into somebody's personal view. I appreciate and endorse. Each one is entitled to their own view. But in general, I have a viewer base who has exposure to small and mid-cap stocks and small and mid-cap SIPs. In fact, in last 2 years, given that the small and the mid-cap stocks have done well, the flows into small and mid-cap mutual fund schemes has been absolutely breathtaking. So for those who have exposure to small cap SIPs or mid cap SIPs and have a genuine 5 to 7 year view, you will not advise that one should have this blanket approach of not ever investing in small cap SIPs, because in cycle they would also benefit from that. I just want to clear the air on this with your personal thoughts without getting into what others are saying.
So each one has to do what they are comfortable with. The first priority is asset allocation. If you are, let's say, 100% invested in small and mid cap and you are doing small and mid cap SIP, then maybe it's worth either taking profit out of small and mid cap funds or stopping your SIP because you are overexposed to small and mid cap as an asset class. Second, if you are market timer and you had invested during March 20 when COVID gave an opportunity, then you can take market timing call, booking profit, stopping SIP. That's your cup of tea. But if you are an average Joe who is continuing their SIP irrespective of what market has done, then my recommendation is that please continue your SIP in small and mid cap fund over longer term time horizon, 5 years, 10 years. Moderate your return expectation, most importantly. Last 5 years, point to point return on small and mid cap is 25%. That's unlikely to happen in next 5 years. So don't get disappointed when returns over next 5-10 years are in high single digit or low double digit. You choose the path which you are capable of walking. हमारे में कहावत है, लंबा साथ है तुमको जाए मरे नहीं तो मांदो थाए. If a small person tries to run with a tall person, he'll either injure himself or get killed himself. So do what is appropriate to your risk return profile. Don't copy someone else.
Okay, fair point, fair point. Focus on what you need. And I always say this, that everybody has a different time horizon, different risk capital, and more importantly, different return expectations. And just like fingerprints, every individual has different fingerprints. I think risk profile and in terms of asset allocation, it's like fingerprints. Everybody should have a very unique kind of a thing, right? Do you agree with me? Fingerprint is a great example. I love your cricket examples, but fingerprint, I think, is like unique idea, right?
No, very well said, Nikunj bhai. Each one has to chart his own course. And please remember, it's very, very difficult to predict the market. I gave our own example on SMA index. It has delivered better return than Tesla. It has delivered better return than Amazon. It has delivered better return than Google. It has delivered better return than Microsoft. We are going by valuations and the governance. In our opinion, we think it is expensive. But as I mentioned, markets can remain irrational more than you can remain solvent.
So, Nilesh bhai, for next 3 years, what looks, they always say that in a bull market, hope trades at a premium. In a bear market, reality trades at a discount. We will have to settle somewhere in between. You factor in a bit of a hope and you factor in a bit of a reality. So from a 3-year horizon, what is looking good? It could be a theme, it could be an idea. What is looking good? Where there could be a market outperformance?
So one, Nikunj bhai, as I mentioned, from a sectoral point of view, thanks to the budget giving 1 lakh crore tax rebate on a recurring basis, consumer discretionary space looks good. Now, obviously, there is obligation on citizens to go and spend that rebate in India. If they go and spend money on imported goods, or if they go and spend money overseas, Indian economy doesn't benefit. But in our opinion, large part of that tax rebate will be used on discretionary space, small value durables, large mid value durables, education, entertainment, travel, and tourism. So the entire discretionary space should get re-rated over next couple of years. The second is private banks and NBFC. Today morning, RBI deferred LCR and provisioning norms. This will leave more money in the pockets of banks for lending. Economy is also picking up after September 24 slowdown. Overall, private banks, NBFCs based on valuation looks attractive. Clearly, this is the time to be overweight large cap and underweight small and mid cap. Large caps, mid caps, and small caps returns will narrow down significantly, unlike last 5 years. And large caps in sectors like banking, consumer discretionary, pharma, and telecom does provide good opportunity. In mid-cap space, we'll look to invest in IT companies which are leveraging AI and trying to deliver better, cheaper, faster solution to their customers.
Right, appreciate your time. Next time, fingerprints, cricket, Sunil Gavaskar. But अब Kapil Dev को भूल गए. India has a lot of Kapil Dev, right? 1980s, yes. If Sunil Gavaskar will get out, yes, it would be slightly tough for the Indian cricket team. But then we found our own Kapil Dev. So I'm sure that Indian markets will also found their own Kapil Dev.
Absolutely, Nikunj bhai. Kapil Dev भी आएंगे, तेंदुलकर भी आएंगे, रोहित शर्मा भी आएंगे और विराट कोहली भी आएंगे.
अभी अभिषेक शर्मा का चल रहा है नीलेश भाई टाइम. Thank you very much. Always a pleasure to have you on ET Now.